key element is confidence level. This is an actuarial term for what is the probability that the pool has enough to be able to pay anything that may develop in the future. The probability is about 97%. The goal of the pool, the board of directors that was established almost 3 years ago now, is to achieve a 98% probability. We're not quite there, we're close, we're not quite there. Question came up in the annual meeting as to using some of this net asset to cushion the rate increases. There was a proposal to pledge $1 million of the net assets towards this New Year's rate increase. The concern was we really just couldn't see the future. If we knew that we weren't going to have more rate increases because of an unstable worldwide economy, we might have looked more favorably upon it. But because we haven't achieved our goal of the 98% or more, and still an unstable worldwide economy, the decision of the board of directors was not to support that idea, at least this year. It's still available. It still would be available to use next year if there are increases again that are forthcoming in the future. Okay? Sure.
What's the, what are some of the ranges of the confidence level in the insurance industry, like among farmers or Allstate or USAA?
All of them, if you want to have an A rating under AM Best rules or Standard & Poor's or anything of that nature, you have to be at that 98% or better.
The 98%.
In order to be an A rated company. Then the number, like an A15, which is what I told you ACE was, means that they have at least $2 billion worth of assets. So.
Yeah, the state risk manager sets the confidence level that all self-insured folks need to be dealt with, and they've set it at 70%. And if you think about that confidence level, if the pool ceased to exist tomorrow, we have claims that are out there that haven't been reported yet, called IBNR, and we've got claims that are back here in time, a claim again, or a violation of a person's civil rights as if they were a child. They've got 3 years after the age of majority to bring that forward. So we've got some that are hanging out there that we don't even know about yet that could come forward. So the actuaries put all that into a big, huge pot, and they figure what the number is. That would be the net assets plus the claim reserves would cover that to the point that we're 97% for sure it would cover all of those potentials. Now, as time goes, we get to 98%, the probability is we're pretty close, and so that would be the kind of the cap. They're never 100% sure. In the event that the pool, for instance, quit and all those claims came forward and it was more than what we had in reserve and we had in equity, then we'd have to come back to the membership because we're self-insured and reassess ourselves to make up the difference. Is how it would work.
And that's key because remember I mentioned earlier on the other chart that we had to increase the rates to the membership for 5 years. In 2004, this net asset was actually a net liability of about $1.25 million. So in that 5-year window, without raising the cost, we've actually recovered about $8.5 million of favorable transition. So much of that was recovery of insurance dollars that were owing, but they were owing for a long term, and the state auditor's office requires that you write it off after it's at least a year old.
And prior to you folks taking offices, we had a situation where the pool experienced 5 really bad years. There was the bad winters, and for one reason or another, there was a bunch of new tort actions that were created by the court that we didn't have before. And as a result of that, the pool went through a very tough time. A lot of big claims, expensive claims, and we didn't have enough money in the reserve to cover those needs. And so what had to happen is we had to go back to the membership and say, we need to reassess you, or reassess ourselves, I mean, basically how that works, to make up the difference. And that was not, it's never a pleasant experience because that assessment comes on top of your insurance premium, which is, so the board of directors, when they thought about pulling money out of that member's equity, they said, no, we're going to hold it there because if we do have a bad, this 1 year that we're experiencing now is a cycle of bad years. We want to make sure that we don't have to come back to membership and do this retroactive assessment. we avoid that at all costs, essentially. Quickly, I know you have some questions and we need to discuss one other issue here, but as I said earlier, the training is something that is easy to target during tough economic times, and I suspect you cut back on your training, or at least unnecessary training within the organization. We are very aware of that and make ourselves and our programs available to you to supplement whatever training you do have. Big focus this year is public records certification and management and supervisory training, because employment practices continues to be the highest costly area in terms of claims that have come through. And this year we're kind of dropping it down a level and trying to get to your first line supervisors and a little further down the organization. That's not to say it won't be relevant to those that haven't taken the course before, but and those we're specifically targeting throughout the region. So there's a regional one, Clower, you may be a host, whoever hosts it, it'll be within easy driving distance and be able to do that on a 1 day or day and a half program. We do come out and do site visits, we assess exposures, we help you with developing policy, whatever it is you need to do to be able to keep the wheels on the bus on your side of things and keep those claims down, because it only serves the rest of the members as well. So it's part of our thing. We do have a fairly extensive web library that is increasing over time. Usually somebody else has already experienced whatever it is that this newest, latest, and greatest avenue of litigation might be. So if something comes unique to Jefferson County and think, wow, I wonder if anybody's addressed that yet, typically it'll be out there in that library, or we can find that for you. Let me go back here. One of the things we're doing this year, is we talked about, is on the claims side of things. Again, the member counties can adjust their claims up to $50,000 or $10,000 in your case. But we're taking a more aggressive role in terms of making sure that the membership has the wherewithal to litigate those claims and carry them forward with their own staff. Oftentimes, people in their prosecutor's office, the civil folks, are oftentimes generalists. And some of these areas of litigation are very, very specific and very unique, and the law is very complex. And so we try to supplement that with defense counsel. And we're going to take a more aggressive role to make sure we have proper defenses against some of these situations, so we don't end up with these things running out of whack. But we do have the responsibility under the interlocal agreement to defend your claims, all of them, or delegate back to you. We have a responsibility for using what they call a jury verdict evaluation process. Because the state of Washington does not have caps on pain and suffering, and it's unlike all but 6 other states in the union, it's kind of the sky's the limit on some of these allegations. And so when we reserve, that is, we say this claim is worth this much money, oftentimes we're arguing with your staff. You probably don't see it at your level, but David Alvarez or somebody goes, well, why would you reserve it that much? Well, because the juries in the state or the other similar states have said this is what the outcome on a similar set of facts. Now, they're not always exactly the same, so we have to take the kind of the average and kind of put it in there. But so that's an area that is always an area of discussion, is particularly is how much you reserve in that. But we do use that jury verdict value. In fact, it's required under the state rules. Third is we have a responsibility to settle lawsuits and claims against the pool, against yourselves, the counties, your staff. That's our role to play.